Hey Alpha fam, welcome back to another episode of Alpha Commission. Just wanted to take a second to celebrate today. We got a massive pump, just a massive pump, equivalent to or maybe even greater than the pump that we had the other day. And of course, all of this was outlined here at Alpha Commission. And so just giving a little self pat on the back because we went through this whole process. It's been a very stressful time coming down from $69,000. Everyone thought we were just going to fall to hell. Of course, there's lots of good reasons to think that we aren't out of the woods yet. And you're going to have to watch this one really closely, guys, because the world is in turmoil. We've got stocks in chaos. You know, the volatility is just through the roof. And, we're not sure what's going to happen next. But what we can do is we can make a plan. We can think about setups and invalidations. See, a lot of people on Twitter and out there in the internet, webs, they're just trying to say, I called this, I called that, and sometimes I fall into that language because it's just like a culture, right? It's this toxic culture of people wanting to be fortune tellers and wanting to be right, right? But it's not about being right. It's just about finding a setup and then marking off where you might take profit and where you might get invalidated, right? Where your concept just falls apart. And that's why we make setups for both situations, the bullish one and the bearish one. If you think, whoa, what's this guy saying? Are we going up and down, up or down? Well, you can't actually trade that way. You can't just say, we're going only up, or we're only going down. It's just not how it works. You have to have both concepts in mind because the chart goes up and it goes down. And the only thing that we can have are setups and invalidations. So I just want to go through a little bit of what led us to here today because we really did a lot of hard work to get this done. I mean, it's taken hours of just contemplating what's going on in the market and following the news. And of course, you can just apply something as simple as an EMA over the chart, and you can just say, okay, well, we were getting into a squeeze right here on the daily, right? But where did you enter on this on the daily? You were rejected here by the 20, you were rejected here by the 20, you were rejected here by the 20. Okay, are you telling me that you just magically got in, like on this candle? You would have had to been sitting around like today you at the right time you'd have to been sitting around and then catch it on that pump, right? So when did you get in, right? Same thing here. A lot of people were saying, oh, this was a rejection, and then we broke out of it, like this was a complete rejection. So did you enter here or did you enter here, right? That's the thing. Like we can use EMAs, and I love EMAs. This is the primary way they trade. This is the confirmation of it all, right? But to find the setups, it also takes a lot of work so that you can get good entries. And what I wanted to show here is that you could even think that you were going to continue. You wouldn't know exactly, based upon the EMAs, how far you can go because you can squeeze through these things. It's happened before, right? But you can also get rejected by them. So you have to have the complete setup. You have to follow a lot of the information, and there's just a lot of things going on, a lot of moving parts. There's the war on Ukraine by Russia. There's the stocks. There's the Fed. There's all these type of things move together, and it's not just one thing. Of course, you can buy in here on the confirmation, right? If you could time this perfectly within a 1 day, you could buy in here, but you left a lot on the table, right? You left a lot on the table, and that's almost as much as we until we maxed out, right? And if you were a little bit late, well, that would be a pretty late entry to get in on. So you'd really have to think about, managing your risk, right? So you want to like take a look at all of these things. It's not just one thing. And let's go through some of this stuff. The first thing that I noticed and was the biggest clue to me just right off the bat, right? Because let's just set our EMAs aside. I've already told you multiple times on this channel that I'm primarily an EMA trader. If it comes down to any of these factors and the EMAs, I'm almost always going with the EMAs, okay? That's why I wanted to talk about that first. But that aside, how do we find our setups? Well, the first thing that I noticed is that we had this angle. I remember way back here I was saying, okay, all of this is angled down, angled down, angled down, kind of flattening off. Finally, we're getting kind of this up angle. And I just thought to myself, hey, you know, these angles matter, okay? I'm a big diagonal support trader. So I don't use just the horizontal supports. I love the diamond patterns and I love the horizontal patterns. I think they work great. If you take the time to mark out your horizontal supports, you could take the time to mark out your diagonal supports. What's the bias? What's the bias against diagonal supports, right? They work just as well as horizontal supports, and you can see that. You can see that. They're just the channels. They're just channels. And the price action follows channels. So when you have an indication that you have a big channel forming, we had this high here, we had this low here, right? I mean, this is basically on the weekly, right? This is the weekly. So it's not a burden. It's not a burden to think about these things. You're just sitting back, just looking on the weekly. Okay, I got a point here, got a point here. As soon as this point existed, this high point, then you could say, oh, looks like I've got a channel, right? Because as soon as you have this point, and this point, you can just, in your mind, you can just mark off a line that goes through here. And then you imagine a parallel line. So none of this even happened yet. None of this even happened yet. But you can just imagine if you have a diagonal that goes this way, then you're probably going to have a somewhat parallel channel that goes this way. And that may be invalidated. So you have invalidation points, right? If it goes lower than that, or if it goes higher than that, then the diagonals need to be changed. Similar to horizontal supports, right? If you break through it, you may need to define a new support, right? Like this wick may indicate something, but so may these wicks down here. But it doesn't mean that you can't break through them, right? And so if you were biased and you didn't consider these type of diagonals, then you would have completely missed this setup. If you were only looking at horizontals, you would have completely missed this setup, and it was giving you weeks in advance notice, right? You could have been on the weekly, or you could have been on the 5-day. You could have been just kicking back, noticing that there's a possibility for a diagonal channel to appear. And again, so if you're just using horizontals and you're just using EMAs, you wouldn't have seen that coming out, right? So these type of diagonals and the diamond patterns that they create, it can be quite helpful. I just wish that people would be open-minded to things instead of like making fun of others for having a different style. It really, we really can improve each other if we listen to each other and try to find things that support each other, right? So be open-minded. There's 100, thousand different ways to trade, and if you find one that works for you, just keep exploring it, and don't rely on it if it's more of a newer style or if it's a little bit chaotic until you have a reliability history behind it, right? But anyway, having identified that setup with these 3 points, I could already mark in my mind where I thought that would be a good bounce point. People say, "Oh, you're just guessing. You're just guessing." No, I marked it off in advance in my mind, right? I had this channel set up in my mind based upon the fact that I trade diagonals. And then I thought this right here would be a great point for a possible entry if we did manage to, come back down. And, what did we do? We came back down. We came down so hard, people thought, "Oh my God, like we have to get out of the market. We have to get out of the market." But as soon as we wicked and then pulled back even slightly, I thought, oh, you know what? this diagonal is going to be a support because that's how they work. They work just like horizontal supports. And you had the market telling you for weeks. You had the market telling you we're making a diagonal here, we're making a diagonal here, we're making a diagonal here, we're making a diagonal here. This is going to be a diagonal. Does that make sense? Does anyone have a question about that? So of course these shapes, these angles matter. It's not just the horizontal, right? And if you were again, if you were just on on the daily there, right? Let's do a replay to that moment. You would have been well under your EMAs. You would have been rejected by them. There's nothing on the EMAs that would have told you to take that trade. There's nothing that's giving you confidence here on the EMAs. You're below everything. Everything is pointed down. You're below the 200. The only reason you're going to take this trade is if you use some other strategies. You know what's going on in the world, you're following the markets, right? You're following the news, and you have a theory about these diagonals. You know where your horizontal supports are and your diagonal supports are likely to be, right? And so that's what I traded on, right? So I made that theory, I made a plan, and then the invalidation is, okay, if we had that wick, because I assumed this was going to hold the way that it held here on a wick, right? If that wick broke down further, a bigger deviation than what I could tolerate from my own personal portfolio, then you sell. That's it. You sell. Because then you have this continuation downwards, right? It's not like we can just be biased to one idea. There's also the possibility that this was a downward channel, right? Like something like this. So you really wanted to see yourself bounce off of this line and then break through it, right? Because if this was the downward channel you're in, that's why everyone could be terrified. Because from this perspective, it looks like we're accelerating down, right? That's how they get you to sell your position if you don't have a plan. So, let's see. Let's get rid of some of these things. The next thing to consider is these fibs, all right? So we had a low and a high, and our fibs, as well as these volume profiles, were suggesting a couple zones here, right? I marked this off, right? This is my drawing. That wasn't made by an indicator or anything. That's my drawing. I marked off this zone as a possible support zone. I wanted to see this area held, right? Let me just fast forward. So this is the real chart. I wanted to see this zone held. And that would be a fairly bullish retracement, but it would be quite deep and scary, right? And as long as we only wicked below it, right? And we only got a wick, but we had a daily close in that zone, I would still consider it bullish. This wick is just to terrify people, right? It's just to terrify people out of their position. As long as we were wicking, no reason to be bearish. We closed the day inside of this golden zone, and then I thought, aha, that's this is still golden. And again, we're thinking like on the weekly still, right? We're not stressing every day. It's not making life stressful for you. This is big picture stuff, right? You're seeing a lot of volume here, a lot of interest in this area. You mark it off in advance. You do your fib to see which levels you might come to. You have your horizontal supports, you have your diagonal concepts, and you just kick back. Wait for your invalidations or your validations to hit. Of course, you should be on the daily or some reasonable time frame where you can see what the price action is happening, so you can dynamically respond. But you don't want to be so low that you're freaking out. Because if you're trading these big movements, right? Because you want to make big gains, if you're on the 1 hour or lower, and like a lot of people trade on the 15-minute or the 5 minute and they're just like scalping little things, they literally have no concept of what's going on in the market. I mean, it's not that they don't, right? Because they can apply the same principles on the bigger thing. It's just that for them, this is what the market looks like, right? This is what the market looks like every 5 minutes. It's just chaotic. It's utter chaos. They're not sure what's going on, right? It's just chaos. And so this could terrify you. This could make you super bullish, right? It could terrify you. And it's going to be a very stressful day because this is all within one, within one day. If you're on like the 5 minute doing all these scalps constantly, right? But you can zoom out, right? The expression, I hate that expression, but it's true. You can zoom out 1 hour, 4 hour, 12 hour. Start to get a better picture. Still freaking out. Daily. Now you're getting into what the big money is trading on. Because the big money, they're not trading on the 5 minutes. I mean, they've got their bots and everything like that, but they go home to their wife and kids. You know what I mean? They take their weekends. They go on vacations, right? So they're trading on the quarterly, on the monthly, on the weekly, on the daily. They're not, they're not micromanaging. They're trading the big picture. And then if there's an event in the news, of course they'll take advantage of it, right? So they're following the news, they're following the stocks. And so for them, it's just a wick. It's just a wick. The smart money, it's just a wick. They're not freaked out by this, right? But everyone else is panicking. So this is part of the psychology of it. Now, you're looking, okay, I'm at a good support place, but everyone just got freaked out, so they're still in that panic mode. Oh my God, we're gonna go down, and they're thinking, okay, well, we got through this, we didn't fall there, but we might be falling again, right? Because we might be making this type of a channel down, and it's so dramatic, right? It's more dramatic than our fall here. It might be, another one of these things coming up. And you just have to calm yourself and just say, hey, wait a second. Wait a second. On the big picture, right? Let's get the 5 day. On the big picture, we've just had a bullish retracement, that's all. Yeah, it's on stilts, right? But we're just in this price action area. No big deal. No big deal. We knew to buy here because we had a theory and we could have just sold if we broke down from there. No big deal. We could always buy back lower, right? Just chilling. Just chilling. So that was a big second clue, right? Just a big second clue. And then we have our fractals. People hate fractals. They hate fractals, right? They just hate fractals. And the fractals were telling us, okay, something similar is going on here. Probably gonna get a bounce soon like this, right? Getting a bounce soon. This isn't any guarantee of what can happen next. You're just like trying to find fractals. Just trying to find fractals. It doesn't mean this one made any sense, right? But assuming that this was a fractal that was playing out, you could assume that you're probably going to catch support somewhere, right? I'm going to catch support somewhere. It's here, wherever. And the thing that would concern you about this particular fractal is that you had a lower high, right? This one you had a higher high, and I pointed that out in the video. So I said, okay, this is maybe going to be a deeper retracement than what people expect because we made a higher high here. Like this fractal was playing out perfectly, and then we had a higher high over here, but we had a lower high here. I said, look, this would be when you want to go short. You want to sell here because this doesn't look good, right? Our fractal broke down. We're looking at other things on the chart. And so now we were looking for those support fibs, right? Go back. That's when we were looking for that support. If we could catch support there, if we catch our breath there, then maybe we have a chance to go. But even here, even previous to that, you could know when to short, right? Inside of this. And if you had your diagonal channels on, you know, your theory for the channels, that, then you would have known to short here also, right? Because you had this downward slope, right, that was going to act like resistance. And then you had this top of this channel, right? Top of this channel. Get rid of some of that stuff. So we were at the top right here. And you might just think to yourself, maybe this is a bullish structure, right? Maybe the fractal is playing out and this is a bullish structure. But because of this overhead resistance on this diagonal, maybe we just got cut short. And then we had to test the bottom of the range, right? To test the bottom of this range before we bounce back up. And look, we're hitting this resistance right here. So these diagonals are super important. It's very important that you know where your diagonals are. And if you're not drawing them, you're only drawing your horizontals, you're missing part of the picture. Because this told you when to short, it told you when to long. And the fractal gave you extra confidence in it because this said down next, right? It said lightning bolt, then this one. If you get cut short, okay, you change your game plan. You go short on that one. And you use principles of trend, right? And structure, right? So lower high. You go short on that. But don't forget to go long here, and you just have an exit plan. If you break down too far, it's okay to wick. If you break down too far, you know, get out of the market. And let's see the lower time frames here. Just to give credit to the lower time frames because it's not all on the week. You can still trade these lower time frames just to see what's going on. If you notice some type of shape forming, because when we had this wide channel kind of appearing, right? We had that horizontal, we had the diagonal channel right here, right? But we also had this widening cone, widening cone. And usually what happens on these widening cones is they'll either break down or they'll break up and then they'll use the top of it as support, right? Like this, which is exactly what happened here. And so on these shorter time frames, you do have to like make sure to like pay attention to structure. This was a little bit of a Bart Simpson haircut, and Bart Simpson haircuts, they usually like the direction that they come down, they usually pop up in the opposite direction, right? They pop into the opposite direction. That's what happened. These cones, if you can survive the bottom, you get on top of it and you can pump, right? And so I longed here, right? I told people to long there. Right? I had these buy boxes. And we identified, you know, on this channel that there was a possible head and shoulders on this smaller time frames, and that if they played out, if those smaller time frame head and shoulders played out, right? See, there's a little one right here, there's a little one right here, there's a little one right here. if they played out, they're going to bring us up to this line. The measured move for this one, right, was up here. The measured move for this one was up here. The measured move for this one was up here. And I said, look, if these head and shoulders, inverted head and shoulders, work out, then we're gonna we already made a neckline here and here. Then we're gonna create we're gonna complete a neckline as soon as these work out. And because this is over a week's time, it may take a while. It may take a while for this formation to play out because it's not. Let's see here, get on the daily. Because this head and shoulders that was being formed here, right, you can see it right here. Shoulder one, head, shoulder. It's being formed on the like the 12 hour, that type of thing. So it can take a couple days for it to work out. If something's forming on the 1 hour, it can take a couple hours for the formation to work out. If something's working on the daily, it can take a couple days. If something's working on the weekly, it could take a few weeks for it to play out, right? Like things don't just happen immediately. That's why you need to look at both time frames. You can't just be zoomed in all the time. And I mean, if you want great entries, you can't just be zoomed out either. So this just gives you extra confidence, saying, okay, look, we formed a neckline. It's on like the 12-hour or the daily, so it might take a couple days to play out. Just gonna like take a couple days to chill. Take a couple days to chill. Let our fibs, let our fibs work out. See if we can hold these levels. And we did. We held that level. And so I said, look, if we, take profit at this neckline, because this is where you're going to get a lot of diagonal resistance if you do break down, because it's forming a inverted head and shoulders. And there's a lot of wealthy money that contributes to this, contributes to Bitcoin's formations. They're controlling it. I told you, only 5% of the people who own Bitcoin are regular people. The other 95% like own like more than, they own more than 1 or 10 Bitcoins or something. It's just, they're very wealthy. They have managers and stuff like that. It's a third of it is concentrated in the ultra powerful, like billionaires and exchanges. So this thing is manipulated as heck. And if they want to create patterns to get the market into something, they're gonna do it, right? And a lot of the times people aren't really familiar with what's a valid head and shoulders and what's an invalid head and shoulders, or what the invalidation is either. So if this is your measured move, right, for the head and shoulders, because let's see, man, why do all these symbols always look so similar? So if this is shoulder one, there's your head, and then kind of like forming the shoulder here, right? This is an inverted head and shoulders. Just imagine something like this. Then this is your measured move, and if you put that up top, that's how high you can expect to pump. Now, if you have a lot of resistance in the area, you might not do the full pump, and the more time that goes out, the weaker your move might be. See, this move actually is precisely the move that we had, but down here, because a lot of time went by, right? These patterns is price action. It's not a mathematical formula. I mean, it's not fate, it's not destiny. Just because you have a pattern, it doesn't mean it has to like perfectly work out to the measured move. It's not perfect. This is real people with their real hopes and dreams and their real fears and their real greed, and it gets sloppy. It gets sloppy. It's not just bots calculating a measured move and then that measured move plays out. If that happened, then you wouldn't have to do anything but set up a bot. But the reason why, economics is a social science, not a science, is because you can't do that. You have human emotion involved. And so, look, if too much fear came into the market, then we would have a breakdown. And the breakdown would be on top of the shoulder, and it might bring us down to $33,000. And so you say, look, we have to, let's turn our fibs back on, right? we have our fibs here, right? This was the golden pocket. If we break down below that golden pocket, then we can expect that this is probably playing out. If we break down below this shoulder, right? See where I marked this? If we break down below this shoulder, this invalidation is probably playing out. It's just price action. It doesn't have to look good. It can be sloppy, it can be delayed, it can be an imperfect move, right? Not playing out from here, it's playing out from here. But overall, the price action, right, is upward, right? Overall, we have this upward price action. This is low, this is low, this is high, this is high, this is high. This side is higher than this side. The price action is upward. And that's why we can say a head and shoulders will work out. And the measured move of it is the height of the head because that's just an industry standard. It's what traders use. If you break out of a channel, you use the height of the previous channel, right, in order to measure a move. Now, they may be considering this as a diagonal channel, so maybe they're measuring it from here. I don't know. It's just psychology. And also, not everyone's thinking about it, so it's sloppy. Sometimes it's subconscious. People are trying to get to the high. You know, there's the highs and then the lows, right? They're trying to recover the highs. And so look where I set my my take profit zones, right? I set my take profit zones right there. Because I knew there was a psychological limit, right? There's this resistance. There's these orders. There's stuff on we could get rejected here. If this does play out, we could get rejected here. And then there's this limit. Are we gonna go higher than our resistance? Maybe not. If we got rejected, you should be happy that you took some profit here. And pushing through that resistance, are we really going to break to make a new high? We haven't yet. We haven't yet. In fact, we got rejected. So the fact that I had a second take profit right here is great. It's perfect because we pushed through this resistance, but we weren't able to make a higher high, right? Lower low, higher low, lower high. We want a higher high, or is this going to be a lower high? We don't know yet. This could work out or it could be a massive failure, right? But for this setup, it worked. It worked out. For this setup, it worked out. We knew how to invalidate, and we knew how to validate, and where to take profit. And we knew where to exit, and we knew where to take profit. And we also knew where to buy, right? As long as you stayed in that bullish zone, you can buy these dips. As long as these head and shoulders were working out and the neckline staying pretty consistent, then we could imagine that this could take off, right? And so we can confidently buy in these other zones. Remove some of this stuff. So this was the bigger head and shoulders. So I was looking forward to. And there's another reason my box is down here for selling is we also had this diagonal support, right? We were breaking down, but we still had kind of a diagonal support. This had an angle to it, just like this has an angle, right? That's diagonal support. It used it as support as it crawled up. Same thing here, diagonal support. It used diagonal to crawl up, and then when it broke down hard, right? As long as we stayed up above a kind of diagonal, because we had this point, and then we popped up here. I didn't want to buy in on this like dangerous area. We were breaking down below these daily and weekly supports, and we had broken down below the monthly. But I said as long as we got back into this area where there's these supports, you see this monthly support and you see these weekly supports. As long as we get into that zone where we're being supported, then I would be willing to DCA in. So I said I'll buy at that support and I'll sell at the neckline resistance if we break down, right? If we pump, you just let it ride, right? And then you take your profits up here. But if we start to break down, I'm going to quickly sell because that's going to be a lower high than here. And we don't know if it's going to break all the way down. It could fall all the way down to 30,000. But we had a support here because we flipped. Previously, we had a channel that looked like this, right? Before this was formed, we had a channel that looked like this. And so you can imagine that that was our, that was our resistance. And then we bounced here, and then we made this higher high. And so I could move that up, but we still broke down. Even though we got above that, we broke down and we used this as support, all right? Something like this, somewhere in this area. Probably this is the more valid one. But it's complicated. It's a zone. It's not like it's one line. It's a zone, right? Here, here. We bounced here, and here, right? That's probably why I moved it up because of these 2 points. And then also we kind of consolidated on top of it. And we had this peak, and so it all lines up like that. But you could also make the case that this bounced on top of here, and that these ones peaked out like that, and this just was above it. So really there's just like this zone here that was resistance previously, and then it became support. And as long as we held above that support, I wasn't too freaked out. If we got below it, if we got below this diagonal support and we got below this diagonal support, then I'm going to freak out because we're also below our stronger horizontal supports. And so I said, when I was making the previous YouTube, I said, if we get back into this support zone, we get on top of these, and I saw that we were using this as support. I saw that we got above here, poking through it, use it as support again. I said, this is going to be, we were down here when I said it, but then I observed later. And I said, if we get into this zone, I'll buy back in. After selling here, right? We broke down, so I'm selling here. Just take your profit at resistance. Why not? Take some profit and buy back when you're at support. But make sure you're in a really good support area. So we have this support, we have this support, we have this support, we have this support. Okay, I have 4 supports below me. How many more supports do I need? Okay, so we have 4 supports below me. It's starting to be a good entry point again. We got above this one, and then you can go all in because now you're thinking that you're recovering this. You're fully supported. You can just, if you want to be super conservative, you could put it here. You're a breakout trader. You know, it's better to buy at support than it is to buy in a breakout because sometimes it doesn't come back to retest. Breakout trading, you buy the retest, but sometimes it doesn't come back. Sometimes it doesn't come back to retest. So you miss the trade if you're waiting for the retest. But if you buy at support, buy here, buy here, buy here, buy here, you can always capture the move. Sometimes you'll break down, but most of the time you'll capture the move. And that's just why you have your stop loss, right? And again, the reason I bought here and not here is because I had a concept of my diagonal channel, which is something that if you were using any other strategy, you wouldn't have had the concept of that diagonal channel, right? I already had my plan in advance. And so you stick to your plan. If it invalidates, it invalidates. Sorry, you missed, a trade. Whoop-de-doo, you know. But if it works out, it works out pretty well, and you just have to be consistent. So now we're at that point, and what do? You just sit back. If you get rejected here, you break down. Okay, you can. Either sell at your entry point, right? Because you could set your stop loss here or right below your entry or whatever. You could keep it here, or you just let it go and you take your profit on your profit zones, right? Whenever I draw these boxes, I always mean them to extend. I just try to keep them out of my way. I don't want to see them in the price action, right? So this is kind of a sell zone. This is kind of a buy zone, you know. I mean, it after whenever I publish it, not before, but because that has a different setup. I just like to keep these things away, right? There's a nice support in this area. There was not that great support right here, so I did not buy here. These are very weak supports. But this was a good one. It flipped and it held multiple times. Held here, held here, held here, held here, right? It broke down, but it got back on top of it. And then it got on top of this horizontal, and it even got on top of this horizontal. And then it already had these two below it. So it was a good entry. Reasonable entry. And then this would be the stop loss still, based upon the fibs, based upon past support, based upon this low here, right? And a couple other things that I showed you. So, yeah, just kind of tooting my own horn here a bit, kind of bragging, but not really bragging because I make a ton of mistakes. But it's just good to know that, you know, you're starting to learn, right? Boom, suckers. Boom, boom, right here, right at the point that I marked on the video the other day. Right at the point, right? And so are we going to bullishly get through this? I don't know. This was a lot of thought that went into this, but it occurred over weeks, right? Like this was the setup that you work for. This is you doing work for your money. A lot of people just think it's free money, but what if this market had turned around, right? What if we had kept going down and you had DCA'd in? You're going to lose all your money. So there's a lot of hard work that goes into this in order to be consistent and also in order to be profitable. And it's not just a one-trick pony. You can't just use one tool, right? You can use one tool and then a couple of confluences, and then you can make a theory on that. And as long as you're good 50, over 50% of the time, then, as long as you're moderating your risk, then that's pretty good. You don't need you don't need all these indicators. I think previously I told you I'm primarily an EMA trader, and then from EMAs I make sure to use trend, momentum, right? And volatility I take a look at. Volatility is complicated. If you get too volatile, the market becomes untradeable. If you're not volatile enough, you don't get profitability in it. So for example, a lot of people don't know this, but if the stock market is very volatile, that's why we look at the VIX, right? If the stock market is very volatile, let's say it's over this 30 value, that's 31 value, it's considered very bad for the market. This is kind of very bearish volatility. It's too volatile. That they can't handle it. A lot of bearish things coming up. If you're below this 20 to like this 12 range, 20 to 13, it's considered a normal range for healthy volatility in the market. And there, the stock market can kind of trade in a very healthy way. And as long as we're above 20, this can be very dangerous territory for the market. You can see we're already at elevated levels, right? So this is an area that the stock market wants to be, but look, we're way above that. This bottom is way above this. This isn't like a stock that you trade for money. This is a volatility. This is how chaotic things are in the market. And that's not good for business. Chaos is not good for business. Business loves stability. Business hates chaos. And so, yeah, in this zone, and definitely above this zone, it's not good for the stock market, which means that you can have crashes at any time. You want to be in this nice stable area because then your crypto can trade as volatile as crypto wants to trade, but at least you have a healthy stock market, backing it up. Here you have a very volatile stock market on top of a very volatile crypto market. And so all of your risk are just enormously magnified. And so this was the scariest point, right? This was March 20, in 2020, right? This was the Corona dump. Very, very scary. Everything like went to hell, right? All of your cryptos died on that day. And then as volatility fell down, as stocks found their footing, you had a bull market. And as volatility increased, we had a lot more insecurity in the crypto market, right? We love volatility in the crypto market, but we don't love volatility when it's in the stock market because the stocks are what give stability for crypto to build on top of. Again, Bitcoin is traded basically like a meme stock these days. It's just it's not that serious. I mean, maybe it's going to be serious in the future if some of these countries really start using it. But right now, it's just traded like a meme stock, just a tech meme stock. And so the volatility in the stock market really impacts the volatility of Bitcoin, which means we're still in this highly volatile area. And you can see we're recovering some of it, right? We're chopping back up after having reached here, which means we could be in danger of collapsing again. I mean, not the volatility, but the volatility could be increasing and that Bitcoin could collapse. The stock market could collapse. You don't know. It's chopping back up. What we want to see it is chop back down. We want to see the VIX getting back into this safe area. And if I taught you that, throw me some credit your way. But yeah, I appreciate us sharing knowledge and learning from each other. It's important not to dismiss what other people are doing because you can learn from others and it'll improve you as a trader, you know. Let's see how gold is doing. Gold? Gold is still trying, right? So gold still looking like it wants to go up. Volatility getting higher. Stocks aren't on firm ground yet, right? A little bit of recovery here on the support. That was a nice catch on that support for the Nasdaq. That's why Bitcoin was probably able to pump today. Nice catch on support. So I've had this marked out for a while. You guys probably saw that. I marked out when we caught support here. This was really dangerous because we lost a lot of support, but we were able to catch it. So are we going to be able to, pop back up and delay the pain and have a reset later on, like we had a reset here, right? Are we going to have a reset later on? Or is this going to be just a lower high and we have more pain in the market? We didn't break out on the stocks. Everyone's celebrating on Bitcoin today, but we didn't break out on stocks. Stocks isn't giving Bitcoin support yet. The volatility is increasing, which is dangerous. Gold is, trying to increase, which means people are worried about things like stocks. Go back to Bitcoin. We didn't make a higher high yet. This is a lower high right now compared to this high. High, lower high, yet again a lower high. That's a downtrend. right? Heck, I can move it over here. And if we retrace further, maybe I can move it here, right? So just because we found support here doesn't mean we're going to pump. We have to break out now. Maybe we're going to do a pullback like this, and then we can pop up. That'd be great. That'd be awesome. Maybe, just like I was showing everyone on Twitter, we had this breakout on Bitcoin dominance, which isn't great. It means your altcoins, are still repressed. Maybe as this dominance breaks down, maybe ETH dominance will have a chance to run. But ETH dominance doesn't look great. It looks like it wants to break down into the zone. I'll show you. It's been breaking down into these like sub zones. This is 2021, right? It breaks all the way down into this like lower channel. Now, it's caught this higher channel several times, so ETH could pump. If ETH pumped, you can be sure that alts will follow. But if it breaks down, it means there's a little bit more pain left in the market. A little bit more pain. Like one of these things, right? Then it makes head and shoulders. See the power of knowing these formations, right? Look at this. You do TA on the dominance of ETH. You caught this level right here. You see this choppiness? That's the head and shoulders playing out. You don't have a head and shoulders here. Now, you could be making one, right? We can use similar principles as before. You could be making one like this. But this area is missing. There's nothing filling that to make a neckline. And then we'd have this thing, and it would be a measured move like this. ETH would pump up, right? From here, it would pump up. But there's no connection to the neckline, so this isn't valid. We can't. We just have lower high and lower lows. We don't even have the possibility of a neckline yet. And this isn't correct. This isn't a valid head and shoulders right here. Inverted head and shoulders. So it's not clear. It's not clear. ETH could go like this and then make a, kind of head and shoulders. Or it could go like this and make a huge head and shoulders. All right. Sorry for the sloppiness of the drawing. TradingView doesn't allow very straight lines, but that would take a couple months to play out. So we don't know yet. We don't know yet. And I just want to point out something else on the Bitcoin chart. It looks like we broke under trend. If this was our trend from this point here, right? Look, previously, when we had a bullish trend in the summer last year, and we really skyrocketed, we were above this trend. We hit the trend line, and then we just skyrocketed after this choppy consolidation in this channel specifically. Here we had a little bull run, right? Bitcoin did, and it just always stayed above this line. Here we've broken down. We broke above this downtrend, so this isn't valid. But we ran into resistance. Look where we're getting rejected. Getting rejected right at that line. I had drawn this a long time ago. This was January, right? This line started to be created. This was early February. So this line isn't arbitrary. We got rejected here. It looks like we might be getting rejected again. We might break through it, and you could see like another kind of bull run on Bitcoin. But in order for Bitcoin to push through, it really does have to get back above this trend. And it's just weird that we're getting rejected right there. It's kind of like a warning, because the reason why it's a warning is because we also have a lower high so far. So lower high, lower high, lower high, lower high. If we had a higher high, then I would think, okay, that's not that serious of a problem. But if Bitcoin dominance breaks down and things start flowing and the money starts flowing into other directions, it could be people want to get out of the market, right? They're just taking advantage of the moment. And then maybe Bitcoin chugs up again. I'm not sure. I'm just not sure what's going on here. We'll have to just continue to follow it. This is like 3D chess, okay? I told you there's so much because you also have to look at market cap. Right, and market cap pumped, but it's also lower high. Market cap for ETH has never broken above this trend. Bitcoin was complicated, but this might be a fake out, right? Oh, look, we broke above the trend. Yay, we're back into a bull market. No. Just a different downtrend. Just a different downtrend. It's not an uptrend yet. It's just a different downtrend. Just means this was exuberant, right? Like maybe this is our real downtrend, and this was just like people being greedy, taking too much off of this bull run. And maybe this is our real downtrend. And this was our real market blow off top. Boom, right? And then we should have made a lower high. And maybe we're going into a corrective phase. And this was just greed. I don't know. I don't know. But as I point out often, if we look at the grayscale, the smart money, they didn't have a higher high. They had a double top or even a lower high. So the smart money, you know, their downtrend is pretty serious. There's a little bit of exuberance, but otherwise, we haven't broken out yet. ETH isn't doing anything. The ETH market cap isn't doing anything significant. You would expect it to break down again after touched here, broke down, 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 touched here. Uh-oh. What's coming next? So we have to see if we break to the upside or not. Looks interesting. Looks interesting. Because here, on this chart, we kinda have a head and shoulders, inverted head and shoulders, right? Sort of like what was going on with Bitcoin. And so you can imagine if it does break out, maybe we do break through here. Maybe we do. Little heads up on that. I don't know, because this is very similar in price action to this side. So this could be a massive fake out, right? You kind of have these things, but you see how this, if this was a head and this is a shoulder and a shoulder, this one's lower than that one, right? But you could also imagine this one, but then the head wasn't as low as this one. So these are invalid. This is a pretty interesting formation right here. Gonna keep a look on that, and you can kind of see ETH. I mean, ETH is kind of moving right now. Look at that. Oh, these are billions of dollars. So the fact that we're seeing a pump is pretty crazy. Let's see if how altcoins are responding. I mean, Luna loves this. Rose, loving it. Yeah, Rose had a similar head and shoulders. This wasn't a great one, but it followed Bitcoin, right? This is a W. Wow, stuff is pumping. So you see, all of these principles that I'm working out on Bitcoin, they can be applied to these altcoins. It's just that the altcoins generally follow Bitcoin and ETH. And you can trade using Bitcoin, but then get into your altcoins, right? Like you don't have to be trading Bitcoin. You can be trading something like Cadena. Look, it just broke out, right? It broke out of its log scale, the orange one. And it's just breaking out of this bigger linear chart. So that was a nice play if you got into those ones. 20%. Luna's crazy. All right, it's been an hour. I'll let you guys go. Hope hope you enjoy your day. We're looking a little bullish here. Gonna need to watch to see if we get higher highs or not. All right. Gonna have to watch to see if we get higher highs or if we're just making lower highs and it's some type of massive fake out. You don't know yet. We don't know yet. What we really want to see, this, just like here, we got higher than this point, right? We want to get higher than this point. And then we're going to be on pretty solid ground. We can watch retracement to this level and then see if we can go from there. But if you already missed the setups from back here, and I walked you through it. I walked you through my thinking process. I walked you through my process so that you could actually do it yourself if you wanted to follow something similar to me. Obviously, I'm not going to be giving calls, because I told you a million times that I consider myself to be learning still. And it would be irresponsible just to be like giving calls, but I'll tell you what I'm thinking. And if you guys want to share any of your thoughts with me, you can go to alphacommission.com and click the link to the Discord, or you can use the link below and in the description of the video. Visit the Discord. Tell me what I'm doing wrong. Share what you're learning. Let's become better traders together. And hopefully we have another bull run coming on. Things are looking interesting. Lots of juicy trades. And thanks always for sharing your time with me. That was your alpha for the day. Stay safe, guys, and happy trading.